Hey everyone, I'm Sebastian Purcell from The Art of the Bubble, and this week what I wanted to bring to you was the beginning of a new series. It's the GameFi series. I became really interested in this series because I think that GameFi is turning out to be its own sort of investment class. So that's the overview lesson here. Is GameFi an investment class? If so, in what sense? What promise does it offer us? And to contextualize that a little bit, by the way, that's the Heroes of Mavia thing in the background. We'll be going through their slide deck and things like that in the series. But just to get things started, let's look a little bit at the problem that we're facing. As investors in the crypto world, right now we are in a sideways market. It's not really a crypto winter. It's been called a crypto autumn. It's a sideways market. Not everything is crashing down. And even if everything were crashing down, the question that we have is like, okay, what are our options for higher yielding returns? Right now, you can go take your money, put it on Anchor, earn 19.5% for the year. And I think that their protocol will probably give you about that range for the rest of the year. The difficulty that we're facing is that that's not really super high, right? People would like better than that. And so I put together a yield farming guide. This was a while back in the middle of 2021. The yield farming guide on how I thought you could get better returns. You can do synth farming on Spectrum. If the Spectrum tokens go up, it's going to be better than 40%. When they were at like $5 in value, you could get pretty consistently like 60% APR or APY. They're compounded, reinvested. Right now they're in the $2 range, so you're really getting somewhere between 20 and 40%. It is better than Anchor Earn. It is also more complicated. I have, a yield farming guide, and the DIYer group, like that subscription level, gets my selection of which spots I pick on the Spectrum protocol, because you have to pick the right coin pairs in order to avoid a lot of impermanent loss. Okay, but that gets you about 40%, maybe more. Historically, I've gotten about 40%, but it looks like 20 to 40 is the range going forward. Beyond that, for your high yield options, what it looks like we have are rebased strategies. Those of you who've done stuff with ohm forks and know things about Olympus DAO and all of that stuff, yeah, a lot of these things just didn't prove to be that workable. Master nodes as a service is another sort of idea where people are collectivizing a bunch of your deposits, buying master nodes, and then giving you those yields back. The difficulty with all of that is that, and I'm going to do an interview with one of the more reputable groups here. The difficulty with that is that masternode yields tend to decrease over time, parabolically decrease. So the backwards looking yields are great. The forward looking yields are going to be a lot less, right? That's just the way masternodes work. So I don't think that that's going to be as profitable going forward. It's a little bit like how everyone was into kind of aggregate mining back in 2017. You could put some of your money into these mining protocols and they would mine for you, but the returns that you got were always a lot less than what you would expect. So that's sort of where the master nodes as a service thing is going. In short, the most workable strategy right now is probably synth farming on Spectrum if you want a little bit higher yields than Anchor Earn. Now, unless you look at GameFi, and I've learned a lot from Cross-Chain Capital about this, and I do want to talk to their founder. I think they have the only option here that works consistently, and that's what got me interested in this space. Do people really earn money in GameFi doing this stuff? Yeah, here's a couple of games that shows you over the last week how much people have earned in various cases. The one that you'll see on the right there at the top, Hunter, that is the Hunt protocol by Cross-Chain Capital. And yeah, they earned $168,000 in a week. See, that's a professional team. And I think this is really the model Cross-Chain Capital has pioneered. If you buy a professional team to act in these games, they tend to just clean up on everyone else, right? And there's a few reasons for that. But if you then buy into these NFTs like they have that are yield bearing, they were doing like 2% a day. That won't continue going forward, right? But it is a lot of money, and you can get your initial investment back pretty quickly from them. Also, you're part of like a GameFi group. You get to watch what they do, get updates. It's like following a sports team in a way, right? So it's kind of cool. Um, Individual reports that you'll read out on the internet will show you that participating in these things is not always going to give you money. By the very reputable anonymous person, Chad Silla here. This is on the Peaked report. Peaked is like a medium, but you get rewarded in crypto stuff. Anyway, so this person went through and kind of cataloged their participation in a bunch of different games to see how much money they lost or earned. In this case, they lost about $200 playing Axie Infinity, 2 hours a day over a month, right? And you'll note that they had the special love potion, the SLP tokens were kind of stranded. Right? They couldn't capitalize on that. They also said that the game wasn't super fun for them. And, that's, well, okay. If you don't really like Pokemon style games, then this could be pretty grindy. So why is there a divergence then between the professional players and the non-professional types? Yeah, and part of it's doing grindy tasks, but if you look at that chart there for the Smooth Love Potion, the other feature of this really turns on the way in which you would need somebody who had an algorithm that could tell you how to trade bubble, like price spikes like that. Right? Like there were two bubbles there, two huge spikes, and even if I didn't get in at the top, I know I could have algorithms that told me to get out roughly near the top, right? And that would have been to your advantage as an investor and player to make sure that you sell out on your SLP tokens when the prices are spiking in the right direction. So part of it is how the players play, and part of it is having a good sort of investment strategy going in there, because you're going to get compensated in tokens, and those tokens can be traded, and if you have an algo that helps you trade those, so much the better. All right, so here's the investment thesis, and I picked the Gods Unchained image in the background. Gods Unchained is it's like Magic the Gathering on the blockchain. In fact, one of the key developers or game, he didn't develop the initial game, but he did develop the he kind of was in charge of all the game strategy going forward over quite a period of time. Chris Clay, he moved to produce this game. So there's somebody who really understands a successful gaming environment, not on blockchain, and has transitioned that onto the blockchain, right? And that's kind of the model that I also really like for these games is when you have a successful off-chain model and then they move it on-chain, you have a better chance of finding a hit, I think, than just hoping for a native blockchain game to take off. So if you do something like that, we know that people play video games regardless of the macroeconomy, right? So that's interesting because it provides a fundamental basis, like something grounded in, macroeconomic stuff that can give us a reason for understanding why this would give us an uncorrelated return. People will continue to be interested in these games regardless of how the macroeconomy goes. They'll be interested in them because they're fun to play. That's why you do have to pick a fun game, right? Each game, as a result, would have its own investment dynamic. And I think there are maybe 4 key features here. The ability of the players, the consistency of the players. A lot of the tasks are just time-based tasks. You have to have some investment trading ability, and very early investment pre-sale whitelist type stuff will really count. As we get later into the series, the third one of these, you'll see how a lot of the earnings of these play-to-earn games are distributed to a very small percentage of players, right? And you have to do special things to get into that, like top 1% of earners. And hence, that's what this series is devoted to. GameFi, I think, is proving to be an independent sector in the crypto universe, along with DeFi, Web3, and, art and historical NFTs. By DeFi, I mean UST, Anchor, SPAC, Synthetics, SNX, Uniswap. Those are all examples of decentralized finance crypto projects, right? Web3 tech, I mean Link, Chainlink, the Graph, GRT, Live Peer, Dequency, right? Those are all versions of Web3 tech. Art and historical NFTs are like the CryptoPunks that you're seeing in front of you. And actually, I think some of those are Crypto V1s. There are two versions of CryptoPunks. CryptoPunks version 1 are actually earlier, and they're about a tenth the price of the V2s. They're kind of like a botched batch. And so that's why the studio actually disowns them, but they are earlier. So there they are, and they look almost exactly the same. Other examples of that would include like Beeple's work and whatever else. Those are historical and artistic NFTs. Those are really different from the GameFi NFTs, right? DAOs, I think, provide a way for participants to get into GameFi if they're structured correctly. The Hunt protocol, even if you put in a massive, massive decline, I mean, honestly, it'll probably still return about 5x in 6 months, but if you're really pessimistic, maybe just 100% in 12 months. That's or at least the model that they pioneered could do that. And let's be honest, doubling your money during a crypto winter is better than getting 40% of the top end on spectrum yield farming, which is really the goal where we were looking, right? We want to see if we can do a little better than that. And since GameFi is bubbly, you saw how the special love potions on Axie Infinity like jump up and down, and the art of the bubble is devoted to like strategies for trading bubbly things. I think it makes a lot of sense for us to focus on this area as it's developing, and it's really of a piece with our whole group. So here's the series outline, and by the way, here's yet another game. This is from High Rise. These little creatures are part of a they factor into that in some way. The only thing that I know about High Rise is it has really interesting demographics, like of 11 million players globally, and it's 73% female, so it's not your typical gaming demographic. Anyway, so they're used as part of that. This is the overview lesson, so just to give you a sense, it's really about the motivations for why I wanted to spend some time on this. I was looking at how to optimize a portfolio, especially during a crypto winter, and that got me looking at more areas for uncorrelated returns, which then got me thinking really hard about, well, heck, this GameFi thing seems to be producing returns regardless of the rest of the crypto market. Does that make sense? And so in the next one of these, what I wanted to look at is, well, the obvious question, how are PDE, play to earn games not Ponzi schemes? A bunch of them are, but how to identify which ones aren't, and hence how to pick the right ones. The next one is, how aren't PDE games MLMs? The actual answer is like multi-level marketing. I think a lot of them are, realistically. Like, if by that you mean that the distribution of earnings is pretty inequitable, then yeah, that's totally the case. And there are certain rules about succeeding in that environment, and hence if you want to be successful at earning money, that's fine. The trade-off is that, you know, for people who then aren't in super early, at least they'll probably get, if they enjoy playing the games, they'll get a fun game to play, and they'll probably play it for free, which is better than paying a bunch of money for it, right? Finally, what I want to do is I want to review like 3 top play to earn games. At this point, I was thinking Axie Infinity, Illuvium, and Mavia, but we'll have to see. Only Axie Infinity is really functional at this point. It is the pioneering one of the whole genre, so it's helpful to look at what they did and why they were successful, and then we can pivot into like some future projects. All right, that is the goal right now for this. I hope you can understand why I'm interested in it, why I've been thinking about even putting together a GameFi DAO, because it makes a lot of sense. It's obviously setting up a professional sort of GameFi team costs quite a bit of money, but if you put that on like a DAO, I don't think really more than 250,000 would be needed, right? To start one of these up, get them going, buy all of the top level NFTs, put people on it, you know, to earn money in all of the right places, etc., and do the analysis of it. That's about all it would need. And that's kind of the Hunt protocol model, right? That's what they did, is they just bought all the best stuff, put their people, like professional people, on it full time, and it's been extremely successful. So I've been thinking along those lines. As long as I can get the legalities to work on that, and I probably can, then I think this might prove a viable model for us. And it's something worth considering for those of us who are interested in earning money in cryptos and just kind of participating in something like this that would be totally uncorrelated with the rest of the crypto market over this crypto winter. The risk return profile might be interesting, and there's probably a lot of other stuff that I could organize and bring to that project. Anyway, that's where my brain is going at the moment. That's my interest in this space. Take care, everyone, and I'll talk to you in the follow-up versions of the series.